What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Thursday, April 4th. Okay, you guys, Tesla stock here today up $1.75 a share. That's plus 1.05%. Let's take a look at this name. It is essentially, it's up a little bit here in the after hours, but listen, as always, after hours volume is very low, so take that with a grain of salt, whether it's in your favor or going against you. Let's take a look here at Tesla today and pull out as much bias as we possibly can to really get a grip on this thing heading into tomorrow, where I think the most volume is going to come in, the most trading decisions are going to occur, the options bias, directional bias, and finally, the expected move. Let's get started here by doing our volume profile analysis to try to pull out a little bit of bias here intraday on the 5-minute chart. Listen, guys, for those of you who are fans of Tesla, starting tomorrow, I'm starting a new schedule. Tesla will be a daily upload. Well, every day the market's open, so Monday through Friday on most weeks. And Tesla, the video will be out every day at 5 p.m. Eastern time sharp. That's 1 hour after the market closes. Now listen, just so you're aware, I upload quite a few videos on this channel. I'm covering a few different stocks. And YouTube has a rule where you can't send out more than 3 notifications in a rolling 24-hour period. So I think your best bet is not to rely on the push notifications. You can set them if you'd like. I appreciate it. But on some days, you might not get them, okay? Because the rolling period, it just it depends which stocks get sent each day. You may have noticed already if you have them turned on. But if you're a fan of Tesla, I think your best bet is to check the channel right around 5 p.m. Eastern time each weekday, because it will be out 5 p.m. sharp every single day, Tesla. But listen, I appreciate you guys subscribing. So let's take a look here at the volume profile and see what we can get here when we peel back the onion. The moves that I'm primarily interested in here today, that pop and drop off the open, that big push mid-morning. That's really about it, to be honest with you, here on Tesla today. Let's take a look. Quite the contextual open. We got a bit of a fade. Honestly, guys, I might say if it weren't the case after like 8:50 a.m. Central Time, if we weren't seeing those green bar pops in volume, I might say, well, the selling volume held on kind of deep into the day, but the truth is it gets offset by these poppy green bars regardless. Honestly, guys, we can knock this out in kind of one swift motion. There's very little bias here today. And if there is bias, a little bit of bearish bias, a little bit of bullish bias, it just washes each other out. So again, a small green day, but not a lot of bias, which I find very interesting. So let's just move on here and go to the self-fulfilling prophecy psychological levels that I'm watching, and believe me, a lot of other traders are paying attention to tomorrow. Now, we got some good news here on the 30-minute today, at least if you're a bull. I suppose bad news if you're a bear. The last few days, we've been struggling to reclaim that 50 period here on the 30-minute chart, that white line, which, by the way, is a very psychological area. A lot of people are watching this very chart with that very moving average. It's the only reason I care to begin with. We reclaimed that here today. Now, what we kind of lacked is a big high-volume push through, a low-volume test, and then a high-volume bounce. We just kind of claimed it and then consolidated while the moving average itself moved lower. But here's what I'm looking at come tomorrow. I want to see that level, that white line, the 50 period, flatten out from a bullish perspective. Flatten out and actually ideally start to curl back upside. Any downside test, by the way, of that 50 period, I want to see a good hold bounce on high volume. Okay. Number 3, if I'm a bull, I want to see that level get back above that 166.50 to 167, really 167, because it's the top of that range that we've seen act as a technical, now psychological level in the recent past. I want to see that moving average get back above there just to help beef up that level to the downside. It's kind of a protective barrier, at least as a potential support level. Now, if you're a bear, a few things you want to see here. First of all, you want that level as weak as possible, meaning you want the 50 period on the 30-minute at least to stay below. Number 2, you want to see a break of both. 166.50 to 167, and by default, also the 50 period. Okay, depending on where it lies at the time of the break, if we were to see that at all. And you guys really kind of want to head back to the situation that we were in these last few days with the descending level. And by the way, this is all just psychology. In no way I don't want you guys to get the idea that I look at these moving averages like they're anything more than the self-fulfilling prophecy that I believe that they are, that's it. But it requires a lot of focus on them because in the short term, in the very short term, right? I mean, this video is, we're looking at tomorrow. It's all psychology. Fundamentals are all that matters in the very long term. That's it. But in the short term, fundamentals, unless we're dealing with like a catalyst, like an earnings event, it's just all psychology. So that's the 30-minute here. Let's move on now to the 4-hour and take a look. You can see here that we currently find ourselves approximately 2.9% or so away from a retest of the 50 period on the 4-hour chart. So listen, if you're a bear, you would love to see this thing starting to curl downside. If you're a bull, leave that thing, sitting, trading sideways. And just in the near future, at least on the 4-hour, all I'm worried about on the 4-hour is just an eventual reclaim of that. But again, it's nearly 3% away. We've seen crazier things out of Tesla. It doesn't have to happen tomorrow, though. I'm not really worried about the 4-hour tomorrow too much. Unless we see that level come into play, of course, in which case I'm very much so paying attention then. Just for ideally a reclaim. All right? Now, the daily chart, this is the real story. Okay? This is the one that has the most eyeballs. Guys, as if it's not obvious enough, what's the story tomorrow? Tomorrow's the battle of 166.50 to 167. So, since we're dealing with a range, if I'm a bull, my primary concern tomorrow is to hold 167. And my, optimal scenario is to see the stock putting some distance in between it and 167. Any retest of 167, I want to see a hold on big volume. Bears, you guys obviously want to hold the bottom end of that channel because we're dealing with a range. It's never an exact penny with support and resistance levels. So ideally, you bears would love to crack downside below 166.50 on as much volume as possible. And then if you see a retest at all, doing so on low volume, a small amount of market participants making the bet on the re-break to the upside, right? And then you reject off 166.50-ish on, again, big volume. That would be your guys' ideal scenario. And again, context is important. I'm not talking about 4 minutes. Ideally, always as much time as possible above if you're a bull or below if you're a bear, each level as possible, because that gives the opportunity for as much volume to come in as possible and agree with the current standing of the stock, right? Time equals more volume, equals a bigger sample size, right? And a more well-rounded opinion of the current price. The psychology, right? Now, expected move. Tomorrow is Thursday, so we have 2 more days left until the next expiration. The expected move by close on Friday here on Tesla is plus or minus $5 a share, which is really not all that much. So you're looking at $2.50 per share if you break it up into Thursday and Friday. But I like to add 50% to that to make up for, the potential of having a mixed 1 red day, 1 green day. That gives us, about $3.75 in terms of expected move out of the market, which is not massive. But you are looking at a market expectation of somewhere around maybe 2% per day, 2.25% per day, assuming you see a mix of red and green. If you see a streak, 2 red, 2 green days, then the market's expecting a little bit less movement each day, if that makes sense, since we're talking about the close on Friday. The expectation by then being plus or minus 5. Now, the analysis helps us with forming a bias and an expectation, right? The expected move helps us form a volatility expectation, which helps us more effectively position ourselves in terms of options trades especially, right? And shares for opportunity cost, potentially. But there's one more thing we can do, and that's another directional bias, which is the chain. 1.9 million total contracts traded, 720,000 of those were calls today, 1.2 million puts. In the short-term speculator category, the 0 to 20 delta range, 290,000 calls, 330,000 puts. So just be aware that, the options traders are actually seeing a very slight bearish bias in the short-term betting category. And in the overall ratio, we're also seeing a slightly heavier than the short-term category, a slightly heavier bearish bias on the overall. Again, this is just one factor of many, but just be aware that's how the options traders are positioning themselves today. Listen, if you get value out of these videos, please subscribe to the channel. I greatly appreciate it, and I'll see you in the next one.